Hello guys, welcome to the Trading Parrot. Pretty much since we started this bear market rally, we have seen Bitcoin repeating kind of the same patterns in regards to Bollinger Bands. For example, you can see here that we have three candles where the price of Bitcoin is testing the middle line of the Bollinger Bands as support. Once it struggles and it tests the line as a resistance, there is usually a collapse to the bottom of the Bollinger Bands. In this area here, we can see that the struggle lasts a little bit longer, retest, collapse to the bottom of the Bollinger Bands. There's only one exception out of 3 occasions where we test for multiple days the middle of the Bollinger Band and then we had an actual pump. Right now, what's going on with Bitcoin is that we have lost the middle line of the Bollinger Bands. We are already testing it as a resistance. So we are going to discuss today what I think is going to happen next with Bitcoin. I've gathered a bunch of very useful information that is going to help us drive much better this market. If you like this content, consider subscribing to the channel. Don't forget to hit the like and leave a comment to really do the best that you can to help this channel to grow. Yesterday, we were having a look at this chart and we were saying that this fair value gap around here that formed yesterday, together with the accumulation of the liquidity at the 31K, was eventually going to attract the price. What we are seeing today is that the selling pressure is definitely stronger at this point in time. We also say that the amount of liquidity to the downside was much greater to the upside. So in this case, market maker has opted for ignoring that liquidity that is closer to the price and just go straight to the lower levels. Currently, we are finding support at 28.3, but we can see that there is a very big chance that the price can come down and visit the 26.6 to 26.7. For these probabilities, I'm using a premium indicator from Lux Algo called Price Action Concepts. You can find it in the description with a very nice discount. I'm also using their indicator Oscillators Premium, which I find really cool how this stair comes up and up and up when you're using stochastic mode. And then when you see this reset here, those are usually very good opportunities for re-entering. And we can see that there is one area here when it reset that was a great buying opportunity, another reset around there, another great buying opportunity, and another reset around the 23rd of March. All the 4 previous resets were the best times to enter during this bear market rally. And what we can see is that we still don't have any reset. This move here is still insignificant compared to the previous 2 or 3 resets that we had in the market. Next Sunday, we're going to have the live signal school, and I'm going to teach you how to write a Pine script that connects to Oscillators Premium to get an alert whenever the reset finally happens. So don't miss on Sunday the Signal School if you want to learn how to do things like this with PineScript. We're going to look at the MACD on the monthly. This is very, very important information. If you ask me which 2 indicators are the one more popularly used by traders, you have MACD and RSI. Definitely one of the top 2 or 3 in all technical analysis. If we go back in the history of Bitcoin, we're going to find that the first MACD monthly bullish cross occurred on the beginning of August. You can see it right there, 1st of August, the first monthly MACD cross bullish. This one did 13,000% to the upside. It went from less than $10 to $1,400. That is just crazy. Then the next bullish cross was at the beginning of December in 2015. This made a push of almost 5,000%, so less than the one before. And that's what people call diminishing returns. In the previous bull market, we can see that we had the monthly cross on the 1st of June, and it went 500% to the upside, way less than this 5,000%. But in this scenario, it's the first time that from the bullish cross, we also have a pretty big drawdown of 61% from the time we get the signal. So what I'm trying to say is that out of 3 past cycles, whenever we get the cross on the monthly, it's not just straight to the upside. And the reason we are looking at this is because Bitcoin is just about to have a bullish cross. There's a high chance that we're going to get it between June and July. A few things to consider that are pretty bearish right now. We have the dumb money confidence. Games of Trade is pointing out that whenever it gets above the level 0.7, the S&P corrects pretty heavily, and it doesn't do it overnight. Sometimes it can take months, but eventually after this signal, you get a big correction in the stock market. And Bitcoin still hasn't decoupled from stocks, so it's something to consider as well. This information from Martin is mind-blowing. The ratio between spot and perpetual volume went bonkers. You can see here that from the bottom of the market, how much more this move is driven by perpetual and not by spot. And remember, a ratio too high of leverage versus spot means that any move, any direction that we are taking, in this case to the upside, is going to be short-lived. To sustain a move to the upside, we need much more spot. And in this chart, what I would like to see is the price going higher and the ratio going just sideways or lower, because that means that we have fundamentals coming from spot buys and not from perpetuals, which are usually positions that get close when people take profits. From Game of Trades here, equity put and call ratio detrended. This is relative to the S&P again. When you get too many calls, is usually marking tops of the S&P. And why is this? Because normally when everybody thinks that we are going higher, we go the opposite direction. We usually go against what the herd is thinking. And right here is very dangerous to bet to the upside because too many people are betting to the upside. We can confirm the same story when we look at Bitcoin. Mr. Gong is sharing that the ratio of longs and short on Bitcoin right now is reaching 1.6 and losing 28.4 should pretty much get all those longs in a cascade of liquidations. That cascade could initiate if we lose precisely this level. And how far to the downside we could fall. So let's have a look. Anup is showing us the 200 MA, which should act as a support in the way that has acted in the past. In almost half time of the bear market, we were below the 200 weekly MA, and we claimed it back recently, just a month ago. We have never retested the weekly MA, and if you're wondering where is it located, it's at 25.8. It will be really great to see a rebound from that level with a strong push to the upside. What we don't want to see is losing that level. In this chart that I have never shown before from CryptoQuant is using on-chain data to measure the spent output, and I have marked here only the coins that are older than 7 years. So we have from 7 years to 10 years and longer than 10 years. And this is a great signal for spotting local and all-time highs tops. You can see here that the most spent was precisely at the top of the 2017 all-time high. We get another one very close to the 2021 all-time high. There wasn't one when we reached 69, but there was one when we reached 48, which was the most devastating dump of the whole bear market. Interestingly, they also spent a lot at the bottom of the market, which didn't happen in the previous bear market. And right now, we are getting to a very dangerous amount. This is reaching a level of unloading coins from very old coins. Think about it, more than 7 years old that they haven't been moved. They are moving right now. So this could well become a time where we get a decent correction. And if we look at the liquidity to try to spot where that movement could be headed, I have 3 to 4 areas that I'm looking to the downside for a potential bounce. And I'm gonna give you the one I think has the highest likelihood. We have some liquidity right here at 27K from the past 3 months. At the 20K, of course, there's a lot of liquidity. Many people re-enter at the 20K. but definitely the level that stands out the most is 22.6. 22.6 is really loaded with liquidity. It represents an area where the market maker probably will love to hit. And remember, not because you see a lot of liquidity in these levels, it should be a straight line to here. Market maker loves doing the opposite and getting everybody tempted to go short here just to load extra liquidity in the upside, in this case around 31K, just hit that level to get everybody excited, load up in longs, and then decide to go to one of these three levels. If you're liking this content, don't forget to hit the like. It only takes 1 second to write anything in the comments, but are you paying attention to the CME gaps? We are very close to the CME gap. I'm going to show you that just in a second. If you want to trade the Bitcoin price, I will consider doing that on OKX. They have competitive fees. They have extensive supported list of market products and bots. They have really high security, especially when you connect it with free commas. They have IP whitelisting, fast connect, pairware whitelisting. It's compatible with free commas, with alt-ready. You can connect it with Tradingview. In fact, if you connect it with Tradingview to trade, you can get up to 200 in rewards. You can just go to the tradingparrot.com/OKX or find the link in the description, and you're going to find all instructions to get up to 10K in bonuses and discounts. Not to mention that if you're trading already on OKX using my code in the description, you can get a TTP subscription for free. Just open an account using the instructions below, and then once you get the volume, just claim your membership. Okay, in terms of CME gaps, we have a very close CME gap that formed on the 10th of April. During that weekend, we produced a CME gap of around $200 from 28,100 to 28,300. And just now, we can see that the price is getting really close to get to these levels. I'll be really surprised if the price never comes back to 28.2. Currently, we are printing a very bullish candle and it's engulfing. It's got a big wick to the upside that looks very bullish. So this could head a little bit higher before deciding to fill the CME gap. There is a CME gap in the upside. Let me show you where it is. It got formed a long time ago and it starts from 38.5. This was formed in May 2022. We haven't been there since then and it's pretty large. It's larger than $1,000. I wouldn't be surprised that somewhere within this year we fill this gap as well. But definitely, in terms of probabilities, we should feel this one that is just right there first. I got 3 more charts that are extremely important, so make sure you keep watching the video until the very end. We have the Gaussian channel first, that I'm going to show you what we did in the past 2 cycles because it's extremely interesting and it's going to give us some insights of what could happen. In 2015, we pinched above the Gaussian channel being in red and we got rejected. And we went back down to retest the middle line of the Gaussian channel in the weekly chart. So keep that in mind. We did that while we were forming the double bottom formation before starting the bull run and right before the halving event. In 2017, we came below here. We found the bottom of the market. We went straight up through the Gaussian channel. We tested it as support, but this time the top of the Gaussian channel, not the middle line. This run was 345% right before we came straight down below the Gaussian channel. But the Gaussian channel never went back to red. It bounced back up just in time for the halving event. And then off to the races to the all-time high. What is happening right now? This looks very similar like the previous bear market, but there's one caveat. In the previous bear market, we went to channel straight away. In here, we are having this struggle. So if we did like 2015, if you remember what happened, we got rejected by the Gaussian channel and we came to retest the middle line of the Gaussian channel. If we did that, we will do a movement something like this, retesting the Gaussian channel. So that will be at a level of 25.5. 25.5 will be an amazing amazing retest for the structure to keep going higher. And this structure, seen from the weekly perspective, looks extremely healthy and bullish for another move to the upside. If you wonder what will break this structure, if we go below 22K and we close the weekly below this level, then we are breaking the weekly structure. Anything like this will break this lower low, starting to form a pretty bearish structure with a potential to do lower lows in the bear market. And the last chart I'm going to show you, we've been looking at it the whole week. Thanks to this chart, I was able to spot much earlier that we were about to start having this move to the downside. What's currently going on is that this is still resetting the RSI. Has it fully reset? It doesn't look like. In order for us to start saying that there is a reset of the RSI, I'm going to draw this line here. And usually what I'm expecting for the RSI to fully reset, it doesn't need to go to the very bottom. No. In fact, resetting the RSI for me means doing something like this, and then doing a higher high. Anything that breaks above this trend line, tests or goes straight above, for me, I read it as a reset of the RSI. If we do something like this and come back down, I will say still the RSI hasn't reset. In the next days, we're going to be monitoring this particular chart to understand when we could see that bounce. Thank you so much, guys. Remember to like the video, subscribe, and write a comment before I let you go. Thanks so much for watching this video. I'll see you later.